There is blind justice, and then there is trading justice, so that you can finally afford to get that laser eye surgery. Not only will people find you more attractive once you ditch those old glasses, you'll be able to see your charts better. That's what we call win-win. Speaking of winning, it's time for a little trading justice, brought to you by TackleTrading.com.
Welcome out to episode 7 of Trading Justice Podcast. Obviously, my name is Matt Justice with my co-host Tim Justice. Tim, say hello to the crowd.
Hey guys, how's it going?
Yeah, how you doing today, Tim?
You know, I just had a little chuckle. I don't know if you caught that in the AC/DC song.
Did you hear the toss sound?
Yeah, I heard the toss jingle. Yeah. Somebody got filled on something.
A currency trade. So, yeah. You know, the Australian dollar just opened up, and obviously I like trading bank opens on the currencies, and so, you know, I had an order in there for the last 15 minutes or so, just, you know, to get triggered in, and so, yeah, it was like randomly, I pushed record, and literally within 1 second, all of a sudden you hear the toss jingle, and anybody that trades with Thinkorswim as we do, you know the jingle, right? You know the jingle. So anyways, yeah, that was a little currency trade, and I'm sure we'll be doing podcasts on currencies as well. I want to introduce our guest today. Our guest is an individual by the name of Dean Beckette. Dean Beckette is a student of ours. I mentored Dean. Dean, what was it, like close to 2 years ago now?
Yeah, I believe it was 2012, June of 2012. So a little bit over 2 years.
Oh, that's amazing. Time flies.
It does.
You know, Dean, I still remember, and I knew you quite well even before I mentored you. But I remember you and Vic walking into the office, and Tim, if you'll remember, we were mentoring out of your friend's house that day, and or I shouldn't even say house, I should say apartment, because neither one of us lived in downtown Salt Lake, and it was before we got that office out of the Perry. But you know, it was just an absolutely great 3 days. And I'll tell you, Dean, every time I give a live 3-day workshop, I always talk about you because you're just one of my favorite people of all time. The energy that you bring is just absolutely amazing. I want to ask you a couple questions, kind of just to have the audience get to know you, Dean, and get to know kind of your background a little bit. You've been a part of the Rich Dad Education Program for approximately, what, about 3 years now?
In October, as far as the contract, when I signed it, it will be 3 years exactly. Yes,
3 years exactly. And let's bring it back. Let's bring it back in time a little bit. When you were sent in your 3-day workshop, first and foremost, what were your expectations, even coming to the workshop, that 3-day workshop?
The expectation that I had was that I was going to be not really given a system, but I was going to be taught a system of how to quantify a good trade, how to, and also spot a bad trade.
Yeah.
Be able to say when this is a bad trade and it needs to be cut loose. Say when it's a good trade and you either take your profit or, you know, watch the technicals of the stock in question, and then, you know, if you let it ride, if it's working with you, you're supposed to let your profits run. Sometimes it doesn't always work out that way. Sometimes you end up putting on a stop loss on that profit, and it ends up, you know, doing something stupid, triggering you out and then going up another $10 or something lame like that. But that's just, you know, I expected that you were going to teach us how to manage trading as a business and as an individual.
Uh-huh. And after the experience, now looking back 3 years from now, knowing the depth of this market now, isn't it absolutely amazing how detailed and deep and sometimes complicated this market can be?
Exactly. It's tiring, actually, almost in a certain respect, because of the fact that you're forced to continually second guess almost every single decision you make.
Well, especially in this market condition where, we're seeing random elements, and we're seeing a marketplace that is somewhat manipulated, to say it kindly. Dean, I'll tell you right now, I teach those 3-day workshops, and I've been doing it for about a year and a half now, and they're an absolutely amazing experience. But I'll tell you, Dean, day one, first quarter, basically in my introduction, I basically tell people, guys, I cannot teach you how to master the art of trading in 3 days. I just can't do that. That is literally impossible if you know how deep this market is. And that's why I asked you the question, Dean, is, looking back 3 years ago, coming in with an expectation and being so high on it and whatnot. And now 3 years later, seeing how deep this market truly is. But it's an absolutely fascinating market. And I've always asked myself, well, what else am I going to do? And it's just been an absolutely fascinating journey. I'm sure for you, as I've been teaching you in trading labs for the better part of years now, and gotten to know you quite well. Yeah, it's been 3 years in labs and whatnot. So, yeah, it's I feel like I've kind of went through the ups and downs of your trading with you, and I want to talk about some of that journey, so that people can understand. Maybe not what to expect specifically, because everybody is a little bit different, but maybe they can see some commonality in your journey and your story versus what they're going through, and what they could expect to go through as well. So I want to focus specifically on where you were in your life coming into that moment in time where you sat in that 3-day workshop with Rich Dad. What were you doing at the time? Where were you working? How many years were you working there?
Triquint Semiconductor, TQNT, I now think of companies as stock tickers more than anything, which is kind of odd, because sometimes I'll look at a license plate and go, oh, wow, look at that, Walmart, or whatever. And, I had been at Triquint for the better part of 9 years. I think it was, I had to count like my quote unquote medical leave, family leave that I was allowed, not maternity leave because I'm a dad. But after my wife came back or went back to work in 2007, I was really at a low point in my Triquint career, because I was on top of my game, but I was not being challenged anymore. Yeah. And so I looked at it as like, wow, what could I be doing? And I had been dabbling with stock trading because I had an employee stock purchase program account. And so I was going like, yeah, I'll take the 15%, because I learned about that at Intel, after which I worked at for the better part of almost 3.5 years, and also learning some skills about how to be a semiconductor operator in a fab.
And so did you came into it with a little bit of experience, maybe not the proper experience, but you still you understood kind of what a stock was.
I understood what a stock was. I had never heard of a put or a call.
Gotcha. So in terms of options trading, you were
a call when I was taught, when I remember Scott Stewart in the 3-day $200 course, whatever it was. Yeah. I remember him saying that you're going to have to learn how to trade options. I'm like, okay, yeah. Since I've been in the class, he kind of let us down easy, as in, if you want to make money in the stock market, but you don't want to have, $10,000 trapped in one trade, then you have to trade. Excuse me, you have to trade options.
Exactly.
And so that's when he kind of filled in on the puts and calls. And but to that point, before that workshop, I had the quick sale, or sometimes holding it for capital gains, sometimes just thinking of the dividends when I had Intel stock. And then the other aspect was, I was also invested in a 401k in both places.
And was your wife?
Unfortunately, my 401k didn't vest because I wasn't there long enough at Intel. But at TriQuint, I had a substantial amount of money, which I'm still using today to trade off of, and that amount of money, actually at one point my account balance said 150,000 and I started with 78.
Oh,
so,
nice.
I mean, just to give you that number right there, I feel like that I could do that again.
No,
But
once you've done it the first time, Dean, you can always replicate it, and that's the power of knowledge. I want to go back, so just to kind of clarify. So you had a couple of different types of accounts, but a large sum of it was in a 401k tied to your job at TriQuint, correct?
Yes, I was allowed to invest in bond funds, and ETFs hadn't quite picked up in. See, I started TriQuint in 1998, and oh no, I dated myself. And let's see, and I was there for 9 years. Quit in 2007. It was just shy of 9 years as far as time frame, because I started in August of 97 or 98, I can't remember now, and then and ended in 2007 when I came home to be dad.
You had a 401k throughout the entire time period, right?
Yeah, and the 2000, I know what you're going to ask. The 2007 crash,
Yeah.
I was invested with a bunch of stuff, and I watched it fall and went, oh boy,
Yeah.
And I was a retail investor, certainly. And the other thing I wanted to point out too is that in a certain respect, I feel like I learned. No, just a second. I feel like I learned something in that instance, because once it got down to the low of 2009, I had not touched any one of those things. And I'm like, oh, it'll come back. Oh, it'll come back. And really, honestly, in actuality, it did, because when I cashed out all my funds that I had at the time, the balance had recovered to like $3,000 more than what it was when it crashed.
Mm-hmm.
And so I went. I did the almost the opposite thing that a retail investor would have done, which was just sold and like, oh, better take all what I have.
Uh-huh.
I held on to it because I'm like, I don't know what else to do besides wait. I mean, a crash like this, it's gonna go up. I was looking at the trends. Even though I didn't quite understand anything about trends, I was going, well, it still points up, and that's what people tell you when they talk about the stock market generally.
I can still see an upwards movement. I'll tell you. You talk about what you're specifically talking about is the cycle in the market, and there are many different cycles. There's many different time frames, but one of the cycles that we see from a retail investor, somebody who is simply allocated in 401ks, is in bearish markets. Basically, let's say somebody has $100,000, and
right.
in a bearish market similar to, say, the subprime market crash or the .com crash, you see basically about a 50 to 60% clip in wealth coming out of the retail investor. So that $100,000 all of a sudden at the end of a 2-year cycle is basically right around $50,000. And if they don't get out because they for whatever reason, but some retail investors, like you say, they just can't take the pain anymore, and so they just pull out and go cash and never recover. What happens is, like, say for example yourself, you stay in the market, and then you take a few years to get back up to the original. And so that typically on average, Dean, and every market's a little different. On this marketplace, it took about 4 years on average from the bottoms in 2009 to really recover from the tops of the 2007 before we saw the crash. So what typically takes people 2 years to get back, they make back in a 3 to 5 year cycle. And they basically just go through this cycle over and over and over again. And then they look back at the last 15 years and they have a lost, not only decade and a half of lost wealth, because they basically just tread water the entire time. And that's one of the things that we're seeing in this marketplace is this market to me is not a retail investor marketplace. That changed in 2000 when we started seeing cycles and bubbles and whatnot. And it's imperative that you learn how to trade so that you don't lose money in those bear markets, and you can make money in the bear market and the bull market. And so what you were actually talking about is something that is very consistent to a lot of retail investors out there, and it's a sad broken cycle. And coming back to when you started taken a little bit more control of it. You've came through all of that cycle before. You sat down in a 3-day workshop and talk to me about the decision to start a trading business. Coming out of that workshop, you made the decision to start a trading business. What led to that conclusion?
Well, first of all, when the reality is that Vic and I spent almost as much money as you can possibly spend, in that 3-day workshop to get as much training as we felt as we needed, because we both really looked at it as the idea of like, okay, this isn't really $35,000; it's $17,500 for each one of us. And I'm happy to say that Vic has given me plenty of help along the way with just having somebody to talk to, and so having a partner is really essential in that decision. And if that partner is vested in money as well as time, that's really the key. And so I felt like that, first of all, I had to go home and had to convince my wife. And at first
it always starts with that, Dean. Always.
Yeah. Well, second of all, I mean, it was one of the things of Scott Stewart showed me something like, I'm like, what? I had this, and I'm just doing that kind of a stutter because that's exactly what was going on in my head at the time. Like, you're saying that I can look at a trade and right then and there decide a probability of that trade success. I get to decide the probability of that to success. And yeah, I understand that those numbers, the delta and the theta and the gamma and the vega, all change on a day-to-day basis, a second-by-second basis, for Christ's sake. Yeah, but anyway, my point is that when he said those words, and you not only do you get to choose the probability of the success of your trade, you get to decide in that moment your risk. And so you're not going to risk any more than this, and you get and you have all of these rules that dictate how you set up a trade. And yeah, at first it was painfully hard because of the fact you're thinking about all these things going on in your head.
You're completely overwhelmed with it.
But then after the amount of enthusiasm, if you can imagine, that I was talking with my wife about this, I was saying in ways that he told me, and one of the trades that I described to her was a bidirectional trade, and I think it was a straddle or a strangle or something
No, Scott, it was probably a straddle.
Yeah, and he said, and you know what? This is how much this would have made in this instance, and he's cherry picking, of course. But the point that is, he's also, and that was on the charts, but in his own trades, he was saying, this is what I've done in the past. I had. I think it was like an 89% chance of success, and I make this much if it goes this way, and I make this much if it goes that way. Mm-hmm. And I was going,
well,
whoa!
It's amazing when you see it for the first time, right? Because a lot of retail investors, they come into not understanding what trading really is.
Right.
And they make the assumption that it's just a bunch of gambling, right? That it's just a crapshoot, and sometimes you win and sometimes you lose, and yada yada yada. Nice little Seinfeld reference there, but that's what they assume it is. It's a gamble and whatnot. Well, the thing that they don't realize is that most of the market in terms of trading is all predefined probabilities. Based on, especially when you're a seller in the market, in the options market, everything's based on a probability. And there's nothing about trading that is gambling unless you think of yourself as the casino and not the actual gambler, correct? And when you're mentioning, the delta and whatnot, delta is an option is part of the option pricing model called the Black-Scholes model that defines probability and direction. That's what it defines, and it's been defining that only for about 40 years, right? Theta it defines time decay, vega volatility, and gamma the rate of change of delta. And these concepts, when you first heard them, Dean, how overwhelmed? I know you were excited. I know you saw the potential that you could do. Otherwise, you wouldn't have never have taken control and whatnot. But how overwhelmed were you just from a definition and a language perspective?
I would have to say that, gosh, it's really kind of hard considering where I'm at now. It's really hard to remember. I suppose I could look back at my notes and maybe there might be a fuck yeah just written in the sidebar of a page or something like that. But there was a bunch of I really honestly had this keen desire to start absorbing just about anything and everything that I could that was related to finance. Mm-hmm. And that first day was a bit overwhelming, but I think what was really kind of amusing is that never before had I been struck by something that was just that was that amazing to me. And I mean, I'm hoping that I will be struck by the same amount of amazement in something else in life. But the reality is that I felt like I'd been handed the keys to a Maserati or something like, mm-hmm. and say, you know what? There's the track. Here's 100 gallons of gasoline. You have a free get out of jail free card on the idea of dying or something like that. Go knock yourself out and learn how to professionally drive that car. Mm-hmm. I felt like that I was, I was in charge of my own destiny, and I could have, fallen flat on my face. But then I also was in that mindset of like, destiny, I'm going to make this happen because I see the route. I see the pathway. And it was really very, it was overwhelming, but it was also very, I am going to take you for everything you are, you little whores of companies that I love or hate.
I always like to think about it like, as long as we're taking a little bit from the institutions and the banks and Goldman Sachs and Bank of America. And
I don't care.
Yeah, exactly. Dean, I've always thought of you. Every time I talk to you, it's just I just get so fired up because, there's a story of Cortez when Cortez landed on the...
Burns the ships.
Yeah, he burns the ships. And I swear to God, you are Cortez. When you made that decision to move forward with financial education and, take this upon, I mean, you burned the ships. You said, you know what? This is my career, this is my business, and I'm going to do whatever it takes to be successful at this. And I want you to talk to the people about kind of the level of effort that you have put into this business.
Hold on a sec. Time out.
Yeah.
You know how hard it is
Tim
to get
waited
a word in
22
edgewise
minutes.
with you two guys?
Oh.
Holy shit.
Go.
First of all, Dean, that analogy you used is so funny about being handed the keys to an expensive car. I don't know which car you referenced.
Maserati.
But, I just picked one. Actually, in all reality, it should have been an Alfa Romeo, like a Spider or something.
In 2011, I'm a season ticket holder to our NBA team, the Utah Jazz. Right. And at halftime, they gave away a Lamborghini Maverick. Nice. There's a gas station out here like 7-Eleven called Maverick. It's huge. And they gave away a Lamborghini in a contest. I think it was called like Joe Schmo to Lambo or something like that.
That's a great line, by the way.
The guy won the car. They gave him the keys. He wrecked it on the way home, totaled it out.
Yeah, I read about that on the internet. I wasn't sure, whether or not. Yeah, but I can only imagine. That's one of the things that I'm saying is that when the trading bit and the analogy to the car, I think, are apt because if you just go crazy with it and don't try to actually start with trying to get your base hit. Start with trying to, there I am. You guys suck. I'm making sports analogies. No, you're trying to get to first base with your girlfriend. There you go.
Hold on, Dean. I've been dealing with you for 3 years. Every time I talk a sports analogy or Wes and myself talk in the lab about sports, you go off about how insane and ridiculous you guys sound.
I apologize.
And now,
you guys actually, I have to say, are very respectful.
Oh, that's awesome. Awesome. Base hits and whatnot, but now you turned it into first base with your girlfriend.
Yes.
Only you, Dean.
I couldn't help it.
Yeah, only you. Yeah, but you're right, Tim. I've never had a hard time getting a word in edgewise with anybody that I've ever met. And
Now,
except Dean.
Podcast episode 6, I did give you the 7 signs of narcissism.
Oh, yes, you did. Are you saying Dean represents a few of those signs of narcissism?
No, I'm just
That's funny.
going for a laugh.
Yeah.
All right, I'll just shush up until I have something really important, then I'll just have to tell you guys to shut up again.
Yeah, very good.
I'm good with that.
Yeah, STFU. That's what you do.
All right, coming back to this kind of your journey, though, let's talk about, you were telling me one day, obviously, both of us are all three of us are huge believers in the rich dad mindset and, what Robert and Kim Kiyosaki has done in the financial education industry and whatnot. Talk about kind of who your poor dad was, Dean, and who your rich dad was.
Well, my poor dad was really my own dad, and I don't remember being poor when I was young, because there would be times when I'd go up to my mom and I would ask her for money, and I knew who the person to ask for money was, my dad, because he couldn't say no to me, and I would just ask for $1, 70s, like early 70s, and so $1, I could buy some gum, a couple candy bars. When video games happened, then quarters were priceless.
You can't put a price on a quarter, I'll tell you that right now.
Yeah, exactly right. Yeah, I have a Gauntlet game in my garage. I have a Miss Pac-Man that's actually in a Pac-Man cabinet, and I have a Cyberball game. So I do like football, but with robots, so nobody gets hurt.
Miss Pac-Man is my favorite game of all time.
I know. My wife wants me to get a Donkey Kong.
Donkey Kong was good. Mine was.
Yeah. So anyway, when I was growing up, I don't remember being poor, but I remember being teased by other kids. Mm-hmm. I remember being about my clothes or about something, and it was just there was a point where, and I'm going to try not to get too personal, but the reality is that I started to become kind of an angry kid because people were messing with me all the time. Mm-hmm. And so it was kind of like, you know what? Get away from me. And if you're a friend of mine, you're a friend of mine, and I'm going to treat you with respect and honesty. And if you screw me, you know what? I'm going to be really pissed. Mm-hmm. And the times that you've heard me, you two, I have unleashed that on individuals, and sometimes it was not warranted. Sometimes it definitely was. And then there's other times when, people just decided that, hey, we don't want to be your friend anymore. And I know that had a lot of impact on just the way that I face things and do things. I'm just sick and tired of people lying to me or telling me a story or what I want to hear when, what I probably need to hear is the truth.
Mm-hmm. Well, honestly, Dean, that's you got to surround yourself with people that are willing to tell you the nitty gritty and the cold hard truth sometimes. And I know
exactly
in my personal trading, I've had moments in my trading where I was doing so good and I got caught up in how good of a technician I was,
right.
and all of this, and then all of a sudden the market turns on you, and you've been doing so good that you don't adjust, and the market's right. Just not right. You're right, and
right.
You got to have people that are willing to sit you
God,
down and
you're
say,
saying everything.
You got.
Sometimes it's been going through my head. At times, there have been so many times when I am just literally vividly shouting about as loud as you can imagine right at my monitor with my face about an inch away from will you stop going that
way? Yeah. Dean, that's like yelling at the referees in a baseball game.
Yeah, exactly. Right. It's probably almost it's certainly in some ways where you've seen a player and a ref nose to nose where they're just like, nope, not budging. I am going to tell you exactly what I think of you, and you know,
The player never wins that argument.
And your mother and everybody else who's related to you.
I totally get it. And even as a veteran trader, I'm sure, Tim, you could say this as well, that sometimes we get caught up in the emotional aspect of this industry.
Well, honestly, I'll tell you what Dean just said struck me pretty deep right there for a couple reasons. Number one, I think this goes way beyond trading. How many of us need somebody in our life that will give it to us straight when we need it?
Every single one of us do.
Everybody have one.
Yeah, at least. You got to have that. You don't need to be the guy with 8,000 Facebook friends that you actually don't see, but everybody needs somebody close in their life that can give you feedback when you need it, and hopefully honest and just genuine and heartfelt feedback. It doesn't always have to be negative, but like, hey, dude, Tim, you haven't showered in 3 days or something. Like, what's going on here, right? Whatever it is, but I think that in trading, for some reason, when I see students come into these businesses, it's almost like they've been burnt in the past. A lot of people try things over and over again, which I think is a wonderful mindset, because you never know when you're going to hit one big. You got to keep throwing your hat in the ring, and so they don't always tell their family and friends. Mm-hmm. And they don't. I think they're sometimes
ashamed of it, or don't know how to put it forth. But let me just say one thing to that, Tim and Dean. There was a real estate and motivational speaker that you mentioned, Facebook. It kind of made me remind me of that. And basically, what she put out there was, she said, you have to question whether the life expectancy of the negative people in your life has concluded. You have to question that. You can't surround yourself with yes people. That's right. That going back to the narcissist. That's the narcissist in us that wants the yes people around our lives that just tell us yes, 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 yes. You have to surround yourself with people who will tell it to you straight, who want to uplift you, bring you up, and see you succeed. And in other aspects of my life, I've always called those people who don't want that just a bunch of haters. And yeah. We got to kick the haters to the curb. We got to surround ourselves with people who want to see us succeed. Because you know what? The way I've always seen it, guys, there is so much money in this damn world, and we have printed so much money in the last 5 years that all of us can get our little piece. Every single one of us can find success, So what if it comes from a bank or from,
it doesn't have to be trading either.
Exactly. It does not have to be trading. It could be in a lot of different aspects of life. You got to see people succeed.
Yes. And speaking of which, the one of the things that I wanted to point out about, the whole idea of the Rich Dad education that I think is truly wonderful is because, you can look at it from the standpoint of they're just trying to get rich off of you. But the point that Tom makes time and time again is like, we are trying to get rich off of you. But you know what? We pre-selected you because of you're the type of person that we want to do business with. Mm-hmm. We don't want to do business with somebody who's going to say, oh, this doesn't work and you guys suck and blah. No, come on. Nobody wants to work with that kind of a person who, A, probably didn't try hard enough, mm-hmm. and B, is, constantly focused on the negative. And I know people focus on the negative. You, me, everybody focuses on the negative in different points in their life. But if they can't get out of that mode and switch to something, okay, this thing bothers me, but you know what? I'm just not going to think about it right now. I'm going to do this other thing that is more important.
Well, you mentioned Tom, and I'll tell you right now, he's one of the most successul people I've ever known.
He's crazy. I can't even believe that I get to talk to him twice a month, and it only costs $50.
I know.
I'm sorry, but that is a bargain.
Oh my! Are you kidding me? That is cheap.
I know.
I mean, it's
you probably didn't need to do a wealth management thing.
Yeah.
But my point is that, and I'm shill for Tom for a little bit, but I think the guy is wonderful. I shamelessly name drop him all the time because of the fact that he is helping me.
Dean, you have earned the right to name drop. Okay, you went through the fire and brimstone and the hard work. You've earned that right. But I'll tell you, sometimes it's very hard to find the successful people in our everyday lives when we come from a community like the ones we came from, right, Dean?
Sure.
They're just not there. It doesn't mean they're not successful in like business or small business or, successful in life. It just means successful in terms of the financial markets, because that's just, it's not taught anywhere. And so you have to kind of seek it out. You have to seek out those types of things. And that's something that every one of us have done.
You guys are listening to the Trading Justice podcast, and check us out on tradingjustice.com. Matt, I want to be the plug guy from now on.
That was
every
an
15
excellent
minutes.
plug. Oh, my goodness.
Right? Make sure they know,
Well timed plug.
There you go.
Well, it made me. The reason I even brought that up is because you guys just start throwing around the word Tom like everybody knows who he is. Like people could be thinking about the guy who started MySpace or for whatever they know.
Tom Wheelwright.
There you go. Got to give the guy his proper due. I know who you're talking about. But our audience may not.
Tom
CPA of Robert Kiyosaki.
Yeah, both of those two are. Tom Wheelwright from a tax perspective, and Garrett Sutton from an asset protection standpoint. I mean, those two are
tremendous guys. I'm sorry to say, I cannot. I cannot state that enough. They're both two tremendously. I know they're both tremendously wealthy, but I know they're just tremendously down to earth people.
Oh, agreed.
Regardless of that.
I agree with that 100%. So, yeah, thank you for the name drop, Dean, and thank you for the plug, Tim. I like that. Dean, let's shift topics real quick in here. Let's talk about your trading experience. I want you to walk, because you're a little different than a lot of the traders that even after they learn how to trade, right? Because, I mean, you're a stay-at-home dad now. Oh, you are. Absolutely. You're a stay-at-home dad. So you have a lot of time on your hands to go through your routines and what. How many trades a week do you think you average?
Well, I'm in a low point right now, as I had indicated in lab yesterday, because of the fact that I just don't know where the market's going, and so I don't really feel comfortable throwing too much money around right now. Mm-hmm. When I do find a good trade, I usually jump on it still. My average over the whole time has probably been somewhere north of 20 a week. And right now, I think I'm probably maybe doing 7, if that.
And I think that's normal and this is something I want everybody to understand, when you don't have a good feel for the market direction or volatility or whatever the case might be, it is absolutely appropriate to take a step back and lower your position size or, lower the amount of trades you're doing. I think that is a normal response to it. Tim, I want to ask you the same question. When you get a little hesitant on market direction or your own personal bias to the market, is that something that you also do?
Well, I'll answer it with I guess an analogy or a story. Do you guys play chess, the two of you?
Like chess?
I have.
Yeah, I love the physical game. Like when I was a kid, I used to play with one of my friends, Aaron Arrington. We used to play and play and play and play, and I love the physical, actually holding the pieces, playing a game. I tried to play online for a bit. It just is distracting. Couldn't do it. And so one thing I've been doing the last bit is I have the Lazy Susan you put on your kitchen table.
Yeah.
Yes.
I have a chessboard right there, just a real cheap one, and I have 2 things on it. And every time I go upstairs, I work in a basement. Every time I go upstairs, get a glass of water, say hi to my wife, I make a move from one side of the board, and then I spin the board. Okay? So I'm playing a game of chess with myself.
Oh, right.
Kind of all day long, just to stimulate my brain, and I enjoy it and whatnot, which is sad in a sense that I got to play the game by myself, but I enjoy it. And I feel like that with the market lately and also over time. 2010 or 9, I mean, I might have had 40 or 50 trades on it sometimes. 2013 and 14, I might only have 4 or 5 trades on it times. Mm-hmm. Like in the game of chess, you might have your standard opening. You know your first 4 or 5 basic moves that you're going to attack your opponent with. Then it's always a reaction. The market's been giving us a lot of really weird moves lately, and we
Trade
have to
this.
kind of respond to it, right? And we
Right.
have to either go on the defensive or the offensive based on what the market is giving us. And you can't just always trade your account the same way. And that's hard for a beginner, that transition, because that's a huge
Yes.
leap from
Oh my
just
God.
rule-based trading into just becoming, what do they call it, Matt? Chris Schaefer used to use a phrase, and Bob and Robert Kiyosaki used it, like unconsciously confident. I think.
Yeah,
Yes.
it goes to the learning curve. It starts with ignorance, and it becomes then you become aware of something, then you become competent at it, and then you become unconscious at it. And you're absolutely right. In terms of that learning curve, when you get to the point where you understand exactly what you need to do in any market condition, you just need to be able to react to it. That's where you're unconscious. It's like when you drive down the road and all of a sudden 3 miles goes by and you don't really remember those 3 miles. Have you guys ever had
Right.
that?
Yeah.
There's a reason you didn't wreck, right? You don't remember doing it, but you were unconsciously competent because you've done it so many times in your life.
Right.
Not to say that's safe. I'm just saying
10,000 hours.
Yeah, exactly. And so that's where you got to get in the marketplace if you want to be successful long term. Anybody can go to a website or Investopedia or Wikipedia or whatever and say, what is a bull put spread? Right? And it will say you sell this and buy this. Well, good luck being successful doing that,
Yeah.
And that's why a lot of veteran traders, and that's why Wall Street loves people who just go to Investopedia or Wikipedia or whatever the case might be.
Right.
Because then they become
They don't know
aware
how
of
to manage
something,
it.
right? They become aware of something, but they're not competent. They're not unconsciously competent, and it's those probabilities will always catch up with those individuals.
Which leads to the question, I mean, this is a general theoretical question, because even as a teacher, I have students come in and they don't know, they have an idea of what they want to do because somebody told them, but they probably don't really know what they'll end up becoming as a trader. Like, Matt, do you think as an educator, and Dean, you going through the process as a student and also becoming just like a natural teacher, I think you'll end up doing some of this stuff too. Is it better to bring somebody in and say, okay, we're going to make you perfect at this one thing or these two things, and we are going to have tunnel vision? Or do you just let them know this is going to be a journey, guys? We're going to learn a lot. You got to learn about yourself. We're going to try a lot of things out. We'll figure it out as we go.
Well,
like which of those lanes?
You have to be truthful. You
Yeah.
can't. You have to. The second one. You can't just tunnel vision, because if you do, then those are the people that are going to be first to be disappointed.
Well, I let me answer from like an educator's perspective, because that is one of the most difficult things we go through, because teaching somebody the rule for a strategy is actually really easy. Teaching somebody how to find a trade is not hard. Teaching somebody a couple management techniques isn't hard. But and so you got to have a well-rounded approach with it, and everybody's a little different with that. Some students I feel comfortable going into the detail of everything. Other students, I don't feel comfortable as much. So everybody is a little different. But I agree with Dean. I think you have to give a well-rounded approach, and you got to allow somebody the opportunity to find out who they are as a trader. Because none of us knew who we were as a trader when we first started. I mean, Dean was long stock. That's who he was coming.
I had no idea that I would be so aggressive.
Oh God, Dean! I've spent 2 years trying to get you to stop selling 35 deltas. I mean, seriously.
That's why that I made that money, though. Oh my God!
Listen,
but here's the thing: it was also a trending market.
To embrace it. Yeah, I've came to embrace it. And so now that we're not in, the upper end of the cycle, Dean, let's kind of curve out. Let's get that down to a 20 delta.
Oh yeah. Well, actually, to be honest, currently where I'm at is I'm pretty much dead on neutral, and the last few trades I've made were 25 or less on the delta, and that was mostly because it was either a 25 or a 20, and so I was like, okay, well, that's not a big deal. I can handle that.
Well, you'll like
because
this.
The other one was way too low, no credit.
Our students will absolutely love this. What Dean is, when Dean talks about being neutral, what he's meaning is that his bias in his portfolio is neutral. So if he has 8, 9, 10 trades on, 50% of those trades will be somewhat, bullish, 50% will be somewhat bearish, or he'll just have, some type of a neutrality in his portfolio. And that's something we teach in mentoring in some of our classes is we teach people how to be, how to match a market bias to a portfolio bias. Just to kind of give you an update on my bias right now, Dean, I am actually slightly bearish in my bias right now. But that's actually, only because of this week.
Yesterday and today's trade, I pretty much just switched.
Yeah, that's only because of this week. I'm typically between neutral and slightly bullish, but my expectation was we were going to see a little profit taken this week, and thankfully we have seen that.
Oh, well, come on. 17,000 on the Dow? People were going to go, gee.
Are you kidding me? 2,000 on the S&P 500.
And near 2,000 on the S&P 500.
And at an all-time resistance level on the Russell 2000.
And you know what? I am so glad that finally today Chipotle Mexican Grill took it in the shorts a little bit.
I did not check that.
It's about freaking time. Go down.
It did add a nice little drop. Opened up at about 594 was the open. Let me see. Open was 591, high 592. All the way down to 575 today. Recovered a little bit though at 586. I expect this to retrace though. I think CMG is.
I kind of do too, but I'm also thinking about it that I don't always use fundamentals, but there are times when I'm going, okay, I'm looking at the stock valuation. They sell burritos. Let's remind everybody on the podcast.
Burritos,
really good burritos.
I'm not saying they're not good.
At $590 a share of burritos, come on, really? You're trading at 35 times forward earnings and 52 or 55 times trailing earnings. That's ridiculous.
You're trading at 56 times trailing. You got a PEG ratio 2.2. It's completely overvalued.
It is.
I'll give you guys the trick with Chipotle when you go there to order.
Yeah.
No rice. You just get whatever meat you want. All the salsas. Get the corn salsa, get the hot salsa, get the mild salsa. Beautiful. Cheese. If you need the guac and sour cream, that's up to you. I usually pass on it. Just go with the hot sauce. Yeah, beautiful. Beautiful.
I just have anything to do with the fundamental nature of CMG.
Yeah.
Oh, you guys just got me hungry. It's all.
I'm hungry, actually. Yeah.
It is getting a little late there.
Well, that's the beauty of looking at companies all day long. You can kind of go like, oh wow, I've never heard of this thing, and just go. Well, I'm going to type in a web search. I'm sitting here at the computer, go find out what they do. Yeah. And sometimes I've been really, really surprised at some of the things, and just to not to name drop, but the idea behind somebody like Elon Musk should give traders a hard on.
I love Elon Musk, and I am not shy about saying that.
Man, he's a great guy.
He's a visionary.
Can't even believe it.
Some of the things he's doing is out there, a little bit, I would say. But you got to have people in life that are out there like that. The people that say they're going to build a tunnel from San Francisco to L.A. and they're going to build a tunnel from L.A. to New York, and they're going to start shipping people to space, and they're going to build these amazing rockets and these.
You know what kind of a tourist attraction that would be, regardless if it was used.
It'd be amazing.
It would be ridiculous. I'd pay $100 to go ride on something that would take me a half an hour to get from San Francisco to L.A.
In a pod.
That would be cool.
Those are the things we see in movies, and he's out there like in bad 1990 movies that were projecting where we would be in 2014, right?
And we're not there.
And we're not even close to being there. But
Just to give a quote on Blade Runner, guess whose birthday is coming up pretty soon? My birthday is April 17, 2017. How long do I live? 4 years. That's Leon from Brian James as the actor.
Yeah.
Right there.
Blade Runner.
Well,
great
you know
movie.
what? This whole thing ties back in together from our conversation earlier.
Yes.
Because the market is a subculture. Dean, what you're talking about is being fascinated with products and CEOs and people and personalities and companies. Like we're talking about Chipotle and Tesla and all that. One of the things that was instantly compelling to me about markets was the tie into politics. And I had my undergraduate was in political science, and I just loved. I mean, I used to just go out on the back of the Centrum Auditorium at SUU, just Cedar City, Utah, where I went to school, and just smoke cigarettes with the political science students and just talk about theory and the world and bitch about stuff. I mean, it was great. I loved going to college. Basically, have not done anything with the degree because you don't do much with a political science degree. But when I got into markets, the tie-in from the economics to what happens in Washington and around the globe was instantly compelling.
Me too, yeah.
Not everybody cares about that. You don't have to. Go with what you find
I never thought I would be either, Tim.
Yeah.
But you are.
Yeah.
I know. I'm behind a little bit on The Economist, mostly because it's summertime, and I've had a couple of projects recently.
Yeah,
that took
and when you mean The Economist, you're
reading
reading the magazine
4 hours a day.
Yeah. Exactly. Honestly, though, guys, when you get into it and you see the correlation between market movements and how well the economy is doing or certain economic reports, it's amazing how quickly you find such a passion for it. And that's how you learn about how economic theory. That's how you learn about how this economic report impacts another one. It's like Kleinhans. We had Mike Kleinhans on a podcast on episode 5. No, excuse me, episode 4. And Kleinhans that's basically what he said. And he's an economics professor. He said
that's wild.
He said how I learned economic theory and how the economy impacts the market as I lived it. And that's what you're talking about, Dean, is pulling up The Economist and reading for 4 hours a day and, studying, looking at these economic reports every day for the last 3 years and seeing how they move with market reaction. And by the way, Tesla is almost a buy again. We'll see what tomorrow does.
Yeah, I know. I was trying to think of whether I should put on an earnings trade today or just wait and see. And I have a wait and see.
Are you doing your crystal trade?
I put on my Netflix today. And I think that's going to go sit. I think today is tomorrow. Netflix is going to go down so much.
Oh my God. You sound like the Wicked Witch of the West there, Dean.
Oh, sometimes.
Yeah, you
I
do.
feel like it.
Everybody's got their go-to laugh. I can do a SpongeBob laugh pretty good.
Oh yeah.
I'm not going to do it.
Do it.
No, you don't have to.
I'll bring it in later. It's got to be random.
True.
Now it just doesn't feel right.
Right. Okay. Yeah. You can do that later on if you feel the need. Just
I want to bring it back though.
Express a giggle.
Let's bring it back real quick. And Dean, you said you put on your Netflix trade and you're looking to put on your Tesla trade. And I want to preface this by talking a little bit about the journey as a trader, guys. And I'm going to tell everybody who is new to the markets right now, you're just starting your trainings, your classes, you're starting to pique an interest in it, you're learning a little bit about it, and you're questioning whether or not you can successfully do this. Number one, I promise you, any one of you, if you dedicate yourself to it, dedicate yourself to learning a trading system, you can be successful beyond your wildest dreams. I know that. I've seen it so many times in the people that we have taught, that we have surrounded ourselves with. I've seen the journeys of people like Dean Beckette, and I've seen journeys of countless other people that came from not understanding any capacity of the market to then creating their own strategies. And so do not question yourself. Embrace it as a journey. And Dean, I want to talk to you kind of in that capacity, because about a year, 5 quarters, maybe a year and a half ago, 6 quarters ago, we were sitting in a trading lab. And, Tim, you know how trading labs go. And trading labs are very interactive, especially that Monday 3 o'clock lab we have, Dean, right? It's just a great lab. And, we were sitting in that lab, and Dean, you basically just took over. I mean, I remember you came and said, Matt, I got to show you something. And I'm like, okay. What is it? He goes, I got a new trade. And I was like, oh, well, let's pull it up. Show me some examples. Let's do some case studies on it, and let's see what you got. And Dean, who self-described knew hardly nothing 3 years ago, right? Didn't even know what an option was. Didn't know what a call option was. Didn't know what a put option was. Dean had decided to play around with selling an at-the-money put option and buying out-of-the-money strangles on an earnings play. And when he first showed it to me, and I'll have Dean explain kind of the strategy and why he does it in a second, but when he first showed it to me, I was like, because I'm not as, I thought I was an aggressive trader. Dean, it puts me to shame. And so when he was showing it, I was like, oh, man, that's really aggressive. And then he did it for a couple more quarters. And every quarter now, every earnings season, Dean, what do? We talk about which crystal trades that you are putting on, right? And did you name that trade after Jeff Crystal?
I named it after Jeff Crystal because of the fact that he was – I have to say that I think I understand Jeff Crystal's trading strategy in that he doesn't want to have his money out there for longer than 24 hours because he's afraid that he's going to lose it in a black swan event, which is a great book, by the way.
I have not read that book, but I'll have to check it out.
Well, actually, I have a whole list of books that I think you should check out and I want you to tell me about stuff because I'm looking at stuff that I haven't even read yet. Mm-hmm. And if anybody cares to look, they can look at my profile on LinkedIn and find, there is quite a journey there that I feel like was important to document.
Absolutely. Well, let's bring it back real quick. So you named it the Crystal trade after Jeff Crystal. It is a variation of what we call a poor man's trade, where you're going to sell where you have a strong directional bias, either bullish or bearish, to a stock, and you're going to sell close to at the money options to pay for the out of the money options you're going to buy. It's a very, very speculative and aggressive type trade, which you do in a very bullish or very bearish environment. Well, what Dean had done, and I'm going to have Dean explain it here, is he had taken that concept and applied it to a non-directional. I shouldn't say non-directional. There's still a bias to it.
Bidirectional,
but a bidirectional type scenario. So, Dean, explain kind of how you created this strategy, and then explain what it is.
Well, I was looking at the markets with the idea of, the trade ticket kind of forces you into a bull put or a bear call or a straddle or a strangle because or they just name it spread, and you put in whatever you put in, calls or puts. But then lots of times I was noticing custom. Oh, okay, well that means that you can make up your own thing. Kind of. Why else would they include the word custom on the trade ticket? So I guess what I was thinking about was, so when it comes to earnings, what do? Well, we don't know if it's going to go up or down. We still have a bias, yes, but we don't really know if it's going to lose or gain that 50 points or however much that the market maker move is. Mm-hmm. And so I kind of thought of the idea of, and this was shortly after Jeff Crystal taught us. It was after Technical Mastery, and I think it was also after Focus Forex actually that he the second time I think I got more out of it because Jeff is a very tough instructor to take instruction from. That is the nicest way I'm going to put that, Jeff.
You are not the first person to say that, and I'll tell you right now.
I'm sure he knows that. I still care about him because he's a wonderful trader.
Love Jeff. He's part of the crew, but it took me about a year to learn how to speak his language.
Yeah, exactly right. And so after the second time, I was going, okay, so try to have my money out there as little as possible, with as little risk as possible, if possible, and my mindset was kind of like, well, since we don't know which way it's going to go, but we know it's going to move, whatever it is, it's probably going to move a bunch. We hope it's going to move a bunch anyway. Sorry about using that word hope there, Wesley. Yeah. Anyway.
Hoping $1 will get you a candy bar.
Right, exactly, right. But anyway, so I was kind of thinking, but if we sell something to finance a bidirectional trade and somehow make it a credit or make it as little of a debit as possible, then we do this. If we do this with enough time in lead time due to earnings, then, we have enough time to get out of that short call or short put, don't we? And so I was kind of thinking, and one of the times that kind of made me think about it was, when I had to break a trade, when I had to repair a trade, and I think it was Priceline or something like that. And it was something sick where I was still up a bunch of money from the beginning of my journey, and I was probably a little bit crazy with some of my trades, but I ended up making a trade that was bad, and if I had held the other half of the broken trade on Priceline when it was trading around 600 or 700 or something, instead of its ridiculous valuation, which is still seems to be manageable due to its PE, it was I think if I had held it on the last day, and I took most of my money back off the table, but if I'd have held it until the last day, it would have moved so much that I would have made everything that I lost and $10,000 on top of that. Oh, wow. And so it was kind of like, wow, really, that breaking that trade thing, if I'd had the balls to go through the whole process, would have worked. And so I had the audacity, so to speak, to try it again. And the second time, I think it still didn't quite work, but I only lost like $500. And I'm like, oh, geez. And the reason why I lost it, and this is the reason why I don't use stop losses, at least not that tight, was because the thing went down $1 and triggered my loss, and then went up like, I think it was Google or something like that, went up like 10 or 15. Yeah. And I was just going,
I'm sure you were so frustrated, but that's a good point. Hold on, real quick, Dean.
The third time, I did it with Google again, and the third time, I made nearly $8,000.
Oh wow! Now, Dean, how long did it take you in terms of doing this until you presented it in that lab? How long until you were comfortable with talking about it publicly?
I did it. First of all, I waited until I did it successfully, and that was the Google trade, and I couldn't hold back. I'm like, I made $8,000. I think other people want to know this.
Yeah.
Regardless of how speculative that it really is, because of the fact that you still need it to be directional for at least a short amount of time before the earning.
I'll tell you, this is what I really like about the trade. It's an aggressive trade, no doubt about it. Once again, what you're going to do is you're going to sell an at-the-money put option in a bullish uptrend. You're going to sell somewhat around an at-the-money put option. So let's say you sell that put option for $1,500. You're then going to go buy an out-of-the-money call option for $750. You're going to buy an out-of-the-money put option, which is basically a long strangle, for $750. So basically, you're bringing your net cost to around zero, correct?
That's correct.
Now, if you get the directional movement that you anticipate based on your technical bias, the put option will decline in value to the point where you can pull it off at a significantly reduction in value, correct?
Yes, and still have the put and the call left.
Which basically means you have a free trade going into an earnings play that could drive up, and that's where the significant value on the Google trade went. Basically, you sold that, Google went up, you bought it back, you kept the free strangle through the earnings gapped, I believe it was like 50 points or something like that.
Yeah, I looked at my trade the other day. It was I can't even believe that I had it on almost, except there it is in my notes. It was a 850 put, an 875 put that I sold, and a 900 call that I bought.
Yeah. So you're basically 875 put, short put, long put 850, long call 900, right?
Yeah, and I bought it back for a profit. I bought the sold one back for a profit of roughly $1,200. It was like $1,100 and some change, and I sold the call after the earnings announcement for $77.50, and the other side I lost $638.
Honestly, Dean, I looked at that when you were showing me that trade, and I was just absolutely in awe of it. And it's aggressive, but here's what was so fascinating to me, and here's what I want people to understand. These earnings strategies, and we're going to do a podcast on Thursday with me and Tim on trading earnings, but these earnings strategies are difficult to understand. Some of the more traditional ones, like a long strangle or an inverted butterfly or a short strangle, these can be a little difficult to understand. And Dean, who came from zero experience, zero background, zero financial education, was never properly schooled on this. And 2 years later, Dean is creating his own strategies, because that's what the power of system and knowledge and education can do. And I'll tell you just right now, Dean, I could not be more happy for you with the journey that you have undertaken and the experiences, because I'll tell you, in the last 3 years, I know I have taught you a ton, but you have taught me a ton as well.
I'm glad to hear it, actually, because that was kind of my intention. I felt like that the Rich Dad Education Program has given me so much that I really do want. And I've solicited perfect strangers at times, saying, like, just for whatever reason, just saying, hey, you know what? You don't know what to do. Really, here's my business card. If you feel comfortable talking to me about this right now, then, if you want to talk to me later on, I'm not telling you that I'm going to charge you any money. I'm not even going to tell you that I'm going to probably give you advice that you'll take, but I'm going to try to at least do something that the bank is not going to tell you, and that is there is a way. And unfortunately, it's not just go and give your money to a financial planner, because they're going to take 20%.
Mm-hmm. Oh, it's amazing how that works. But I want to end on what you just said, Dean, because I know you believe it, I believe it, and I know Tim does, and we all do. Is that if somebody's going to teach you something, give it back, give it to somebody else.
Well, I mean, just think about the conversation we had here today, guys. The network of professional people, whether they be tax people or asset protection or traders or economists,
real estate, or
whatever it is, building a network of people that you can rely on, get feedback from, that's important. I think one of the instincts that people have getting into trading is they love the idea of being on their computer and being kind of recluse. And there's nothing wrong with that. But you do have to put yourself out there at times and build a network. One of the most valuable thing about Rich Dad, even beyond the actual content, is the network of professionals that you get tied into.
I agree 100%. 100%. And there's nothing, the biggest, we're called individual investors, right? That's what we're called. There is absolutely nothing individual about what we do. We might process the trades in our own accounts, but we surround ourselves with people, successful people, like you guys are talking about, building a network, building a power team.
Yeah. Oh, yeah. Well, and what's so funny is that, honestly, what I said in lab is really true. I've lost all my gains and then some. Mm-hmm. But here's the thing that I think is really important is that, number one, I'm sitting here. Do I seem like I'm panicking? Do I'm like, how am I going to make that money back? But the other thing that I think is also important to note is that I already know how I'm going to be making that money back, because if I don't make a dime for 2014 and I'm trading my butt off in a brokerage account and in an IRA account, and they see the record of the amount of trades that I'm doing, I can't do anything else but trade. Are you kidding me? Mm-hmm. That's my job. I'm going to make so much in taxes next year. It's going to be ridiculous.
It's your business, Dean. It's your business, and it's a professional business, and you go about it treating it as such. And that's I want everybody to understand something. People think that traders make money every day, every week, every month, and that's not the case. We are wrong on our assessment very often, but it's about over the course of time. Over the course of time, and this is how I've said this on the podcast before, but what else are you going to do? Okay, I know for a fact I will never meet my ultimate financial goals, which are very ambitious. As an employee, I know that. Okay, if I'm going to meet who I want to be from a financial standpoint, I have to invest, and that simply takes time.
Yeah. Well, I think Robert actually in one of his books said it really appropriately, that the reality is that you can get rich by being a stingy person, but you're still going to be a stingy person. And in reality, Robert has all four of his quadrants covered, because he's a big business owner.
Yep.
He's an investor. He's self-employed. I would call him self-employed because nobody has to employ him. And he's also an employee in his own business network.
Yeah, and also,
I mean, that's really, he has all of it working for him because he's now at the top of his game.
No, and that's, we've said this last podcast too, but in the quadrant you can make money in any quadrant. It's how you want to generate the income, how you want to generate the wealth, and what do you want to do with your time. How do you want to live your life? And that's what I'm talking about. Dean, it was an absolute blast having you on the podcast. Your energy is amazing. You got any parting thoughts, words of advice for these new traders, veteran traders out there listening to the podcast?
Words of advice, I would it would probably sound really trite, but I'm going to say them anyway, and that is, don't stop trading no matter what. Don't stop trying to put your money somewhere where it's going to make you money, because if you give it to the bank, if you give it to a financial planner, you know what? The bank is going to lend your money out 20 times over and make a ton of money on that money. Yep. And yes, you have to have some money in the bank, but don't have all of your money in the bank. Have your money spread out all over the place. And everybody has to have a business. Everybody has to have a business. Don't care what it is, whether you clean toilets for, as a maid for somebody, whether you rent houses, whether you trade stocks, whether you are, a miner or something like that. Anything. Everybody has to have their own business because of the tax advantages. Not you're not dodging anything. And I never believed this before. Is that tax preparation is not really a dodge. It is you are going through the laws that were lawfully written by our federal government.
Our tax code encourages people to take advantage of the deductions by creating small businesses.
Exactly.
Because that expands economic growth.
It's terrible that when I talk about this with other people who do not understand that, they look at me like I just, killed their brother. They're looking like, how dare you suggest that you would dodge taxes? I'm like, I'm not dodging taxes. I'm going through and finding every single deduction that I can find, because that is what they have done. You want to get rich?
And you
do it this way. Do you want to make
send your kids
money
to public school?
Doing something that the government wants you to do, like provide housing for other people or to give other people jobs? Of course they're going to give you tax benefits, because you know what? You've just created 500 new revenue streams in your big business.
You always have to think about who's the liability and who's the asset to the economy. It is the small business owner, the business owner. It's those individuals who create that is the asset to the liability.
They created their own job.
Exactly. An employee is typically a liability to the economy. And so when you look at those, obviously our tax code is going to encourage people who are an asset to the economy, expand economic growth, who so on and so forth. So
there's not to.
Honestly, there's like 500 different loopholes in the tax code for business owners.
More than that, I'm sure Tom would probably tell you.
Yeah, so it's like, why not? And honestly, Dean, I know you haven't listened to episode 6 yet, but that's exactly what me and Tim were saying. We're saying we don't care where you're at. Start a business, guys. Start a business. Get your lemonade stand or whatever it is. Go start a business and start acting like a business owner. And you know what? It might take some time. It might take years. But what else are you going to do? You know, what's the answer to obtaining your dreams? I know what mine is. I know what Dean's is. I know what Tim's is, because we made those decisions and we put in the effort and the action and whatnot. But if you don't have a business, if you haven't started something, you know, find something you love doing. Dean, you love trading. You do it every single day. You know, Tim loves trading. I love trading. That's why we love teaching and talking about it. That's why we created a podcast, so that we can just talk about trading with other traders. You know, hear their story. So, you know, it's get out there, create, become a business owner, take advantage. And like you said, you know, there are so many different tax advantages you can take as a business owner. You know, everything from, you know, gas and cost of housing, and, you know, all your different technology things.
I don't have any housing costs anymore.
Yeah, well, that's good for you.
Intel went up to my limit and said, all right, I'm going to sell this. With Monica and I, we're going to sell this much. We don't have any house debt.
Awesome.
Yeah.
Awesome.
Ooh, yeah.
Well, guys, you've been listening. Tim, you forgot your drop, buddy. You've been listening to the Trading Justice podcast. Our guest today was Dean Beckette. You know, I just want to end on this. I was in Portland, Oregon, and I was given a 3-day workshop in Portland, Oregon. And I invited Dean to come over to the workshop to talk to the new students about kind of the journey as a trader, Tim. And you know what Dean did? He talked about his daily routine. And instead of just talking about it, Tim, he went through it. And he started by laying on the ground, simulating the fact that he was sleeping.
Yep, that's right, yeah.
So this was like a little sketch comedy.
It was almost some sketch comedy. Well, part of it is that I just, for whatever reason, I don't know why, that I had no fear. I just didn't. I just started, you know what? This is something. Monica was asking me beforehand, aren't you kind of scared getting them? I'm like, no, I mean, I'm talking about something I'm really passionate about. Why would I be scared?
By the way, if you've never been to Portland, Oregon, I love that town.
Yeah, well, you know what? You should come up and visit us again and actually do it for business and for pleasure. And, I will take you out on the town.
I'm okay with that. There's like 19 breweries every block in Portland, Oregon.
Oh, well, not quite that many, but
it
probably
feels
7.
that way. It feels
I
that
know,
way.
yeah. The one that we walked to from the Max when you were up here that time was that was one of the first.
That's great food. Oh my
Widmer
goodness.
Brothers has been around for a while, and I mean they technically can't really call themselves a microbrewery anyway because they're owned by AB InBev, I guess now.
Yeah, it's great.
Which is crazy.
It was great food, great times. I'll definitely get back up there, Dean, and we'll go out on the town. Tim, final thoughts.
Well, just always enjoyable. It's I didn't forget my job, jackass.
You did. You absolutely did. I've been tracking it. It's 22 minutes since you plugged it, buddy.
Yeah, but you know what? We didn't let him in again.
That's true. It's our fault.
I told off on myself.
Yeah, it's our fault.
Oh, goodness. I enjoyed it. Thanks for being here, Dean. I really appreciate it. It's a pretty cool conversation we had.
Once again,
I agree. I really dig talking with you, hanging out with you, just, getting to the point to where that, I feel like that I don't want to say that I'm close to the end because I don't feel like an end, but next year is going to be, I will have spent 10,000 hours doing this.
That's amazing.
And when you talked about the unconsciously competent thing, there was a couple of times recently when it really kicked in because of the fact that, I didn't want to do it, but I just said, all right, I have to reduce my position size. So I just did it. I just started doing it. And also I don't know where the market's going. So I'm just going to not trade as much, I don't feel good about it.
Mm-hmm.
But then also I'm at the point of that my long-term plan that I have, because I do actually have a short, a mid, and a long-term plan. My long-term plan is where, maybe it's going to be trapped inside of a 401k, but if I make 40 or 50 grand from Monica, then it's going to be like, there you go. There's your proof that it works, because of the fact that not only did I increase my own accounts, because I'm not worried about where I'm at right now, but I'll have also increased her accounts. And it'll be like, yeah, now I am ready to take on the world. There you go.
Love it, live it. Matt Justice, Tim Justice for Trading Justice. Dean Beckette was a guest. Check out the podcast on iTunes. You can research and search Trading Justice. Look us up on the website or on Facebook. Until next time, next podcast coming on Thursday of this week on earnings-based strategies. Tim, say goodbye.
See you guys.
Later, everybody.
Bye-bye.
You've been listening to the Trading Justice podcast. If you've enjoyed yourself and think that the conversations and topics we've covered are important, help spread the word. Give us your feedback. 5 stars on iTunes, like us on Facebook, and follow us on Twitter. The Trading Justice podcast is proudly sponsored by TackleTrading.com. Get off the sidelines and get in the game.